Hello everyone, welcome to today's session on goods and service tax filings. Today we are going to learn about the time of supply of goods and services under GST. In this session we will learn what is time of supply, what are the general rules for determining the time of supply. Then we will see what is the importance of time of supply under GST. Then we will cover the time of supply in case of reverse charge, also in case of continuous supply of goods. Then we will see time of supply in some special cases like in case of vouchers or advances, etc. So before proceeding with today's session, let us quickly see what we have done in our previous session. So in our previous session, we learned about the scope and type of supplies under GST. We learned what are the different forms of supply like sale, transfer, barter, exchange, rentals, license, etc. Also, we learned about the fact that consideration is the key in case of supply. That is, without consideration, there cannot be any supply except for those enlisted in Schedule 1. Then we also learned that the supply must be in the course or furtherance of business, that is, personal transactions cannot be treated as supplies. Then we learned the different types of supplies like taxable and exempt supplies, then interstate and intrastate supplies, then composite and mixed supplies. We also learned about the difference between composite and mixed supplies, then continuous supplies and zero rated supplies. So let us now proceed with today's session. So what is time of supply under GST? The point at which a supply is considered to have been made is known as time of supply under GST. This idea aids in figuring out the precise tax liability date. So in simple words, we can say the time of supply in GST refers to the time when goods or services are considered supplied by the supplier. By establishing the time of supply, we can calculate the due date of our GST payment. We can ensure that we remain tax compliant. Also, timely identification of time of supply is essential for maintaining compliance and avoiding penalties. So the time of supply determines when the GST becomes payable. It impacts the rates, invoice timing and the return filing of the relevant period. Then the legal foundation of the time of supply is outlined in section 12, 13 and 14 of the CGST Act. Section 12 determines the time of supply in case of goods. Section 13 determines the time of supply in case of services, and section 14 deals with any change in tax rate in case of supply of goods or services. So moving ahead, importance of time of supply under GST. So the time of supply is fundamental to GST as it determines the tax liability arising time. So why is it important? It impacts on the tax liability. So time of supply identifies when GST becomes payable, ensuring taxes are calculated and remitted within the deadlines. It prevents penalties and provides clarity in fulfilling the tax obligation of the taxpayer. Then it has roles in determining the applicable tax rates. So it determines which tax rate applies during the rate change, ensures consistency and avoid any disputes. Then it has practical implications for businesses like cash flow management, avoidance of penalties and reconciliation. So cash flow management aligns tax payment with business operations. Avoidance of penalties ensure timely payments, and compliance ensures that penalties are not levied on the taxpayers. Then reconciliations, it simplifies the invoices and payment matching for smoother operations. Then time of supply has relevance to GST return filings. It ensures the correct reporting of transactions in the appropriate tax period. Also, it facilitates the accurate input tax credit claims and minimizes mismatches in supplier filings. Then it has importance in GST audits and compliance also. So errors in determining the time of supply can lead to penalties during audits. Correct determination demonstrates compliance and reduce risk of disputes, and it ensures accurate record keeping and essential for audit and assessments by the department. So now let us see section 12 that covers the time of supply in case of goods. So time of supply for goods under GST is critical for determining when the tax liability arises. So section 12 of the CGST Act ascertains the item supply time at the earliest of the following. That is date of invoice issuance. So when the provider sends an invoice for the goods, the time of supply begins. If no invoice is issued, then the time of supply defaults to the next applicable criteria. The next applicable criteria is the last date for issuing of such invoices, that is as per section 31. So as per section 31, it mandates that the invoice for goods must be issued before or at the time of removal of goods if the supply involves movement of goods, or delivery or making the goods available if no movement is involved. Then the final criteria is date of receipt of payment. If payment of goods is received before the invoice is issued or goods are delivered, the time of supply is the payment date. So in short, we can say the earliest of the three events constitutes the time of supply in case of goods, that is date of invoice or due date of issuing of such invoice or the date of receipt of payment. For example, if goods are dispatched on January 10th, the invoices is issued on January 15th and the payment is received on January 8th, then the time of supply is the January 8th as it is the earliest event. So next we have continuous supply of goods. Continuous supply refers to goods delivered periodically under a contract that requires recurring payments. So in case of continuous supply of goods, the time of supply rules states that if the contract specifies the due date for payment, the time of supply is the due date of such payment, or if the contract does not specify any such due dates, then the date of invoice issuing is the time of supply. For example, a supplier delivers goods monthly under a year-long contract and payments are due on 5th of each month. The time of supply arises on 5th of each month, aligning with the due date for the payment as per the contract. Here, the contract clearly specifies the due date being the 5th of the each month. Hence, the time of supply will be the 5th of each month. So let us take one more specific scenario, that is goods sent on approval basis. What is goods sent on approval basis? It is also known as sale or return, is a type of sale transaction where the seller delivers the goods to the buyer for evaluation before a final purchase decision is made. The buyer has the option to either accept and purchase the goods or return them within the specified time frame if he is not satisfied with the quality or the specifications. This approach is particularly common in industries like textiles, jewelries, machinery and consumer products. So in case of goods sent on approval basis, the time of supply is the earliest of the date of acceptance by the recipient, or 6 months from the date of removal of goods, whichever is earlier. For example, goods are sent on approval on 1st March. The recipient accepts the good on April 10th. In such a case, the time of supply is April 10th. But if no acceptance is given by the buyer by September 1st, that is by the completion of 6 months, then the time of supply by default will be 1st September. Similarly, in case of barter or exchange of goods, the time of supply is the earliest of the date of invoice issuance or the date of goods exchanged. If the goods are supplied through vouchers, then the time of supply is the redemption date of such voucher or the date of issuance of such voucher if the supply is identifiable. So moving ahead, let us take a special case in case of goods, that is reverse charge. For reverse charge, the time of supply is the earliest of date of payment, or 30 days from the invoice date for goods, or 60 days from the invoice date in case of services. So here we will cover only goods. That is from 15 November 2017, the date of payment does not apply to goods and only to services. So date of payment is not relevant in case of goods anymore. For example, suppose a company purchases goods worth rupees 1 lakh from a supplier. The invoice date is 1st October 25 and the payment is made on 20th October 2025. So the invoice date is 1st October, date of payment is 20th October 25, 30 days from the invoice date comes to 31st October 2025. Since the date of payment, that is 20th October, is before 30 days from the date of invoice, the time of supply will be 20th October 25, that is earlier of 30 days or date of payment. So now let us see section 13, that is time of supply in case of services. So the time of supply for services plays an important role in determining when GST liability arises. It ensures that businesses comply with the tax law accurately and on time. So the time of supply for services is determined at the earliest of date of issue of invoice if issued within the prescribed time limit of 30 days from the provision of services, or date of receipt of payment, the date when payment is credited to the supplier's bank account or recorded in their books, whichever is earlier, or the date of completion of services if the invoices is not issued within the prescribed timeline. For example, a consultancy firm completes a project on February 10th, issue the invoice on February 15th and receive the payment on February 20th. Here the time of supply is February 15th as the invoice was issued within the prescribed time period. So next we have continuous supply of services. Continuous supply refers to services provided on an ongoing or recurrent basis under a contract that includes periodic payment obligations. So provisions for time of supply in case of continuous supply of services is if the due date for payment is specified in the contract, the time of supply is the due date of such payment, or if no due date is specified, the time of supply is the date of issue of invoice. For example, a business hires an IT maintenance provider under a 12-month contract with monthly payments due on the 1st of each month. The time of supply arises on 1st of each month as per the due date of payment. Here the contract specifically provides for the due date of payment, that is the 1st of the month. Hence, the time of supply will be 1st of every month. So next, reverse charge in case of services. So let's take a special scenario in case of services. The scenario is cessation of service. So if the contract for service ceases before the service is completed, the time of supply is the date when such service ceases. GST becomes payable on the value of services provided till the date of cessation. For example, a company cancels a construction project midway due to quality issues or anything like that. Work completed until termination is valued at rupees 5 lakhs and the cessation date is June 10th. Then the time of supply for partial services rendered is June 10th. So moving ahead, we have vouchers and residual rule in case of services. So if the goods or services are identifiable at the time of issuing the vouchers, the time of supply is the date of issue of such voucher. If the goods or services are not identifiable at the time of supply, the date of redemption of the voucher will be the time of supply. For example, a restaurant issues a voucher for rupees 1000 on 1st March redeemable for meals. Redeeming the voucher on March 20th makes March 20th the time of supply, since the time of supply is not identifiable at the time of issuance of such voucher. Then in other residual cases, determining the time of supply for cases not explicitly covered under GST rules by using the date you pay GST or file the return. That is, it may differ from case to case. In exceptional cases, barter or exchange, determine the time of supply by identifying the earlier of goods or services exchange date or the invoice date, whichever is earlier. Then import of services, GST liability arises under reverse charge mechanism and the time of supply follows the rules for RCM also. For example, two businesses exchanged goods on April 10th and issued an invoice on April 15th. The time of supply is April 10th, that is the earlier of the event. Next, we have section 14 that covers the change in tax rate. So in case of change in tax rate, the time of supply has to be dealt by section 14. So when there is a change in tax rate, the time of supply determines whether the old rate or new rate applies. The rule depends on the timing of three key events, that is date of supply, then date of issuance of invoice and the date of receipt of payment. So if the supply is before the rate change, then the old rate is to be applied if you receive the invoice or payment before the rate change, or new rate has to be applied if the invoice and payment are after the rate change. If supply is after the rate change, then apply the new rate if you have received the invoice or payment after the rate change, or old rate is to be applied if the invoice and payment are before the rate change. For example, suppose the goods has been supplied 28th of June and invoice has been issued on 2nd July and the payment was received on 5th of July. So if the tax rate changes on 1st July, then the new tax rate applies because the supply occurred after change in rate of tax. So let's take one more example. If the old rate till 31st July, new rate from 1st August. Goods supplied on 30th July, invoice raised on 2nd August. Then in this case, new rate shall apply since the invoice is after the change in rate. In case supply is made on 2nd August and invoice raised on 28th July, still new rate shall apply because supply has been made after the rate change. So there are common challenges in practice while applying the time of supply, like delayed invoices attracts interest liabilities, Then partial payments, proportionate tax liability occurs at the time of supply. Then wrong date entries leads to reconciliation issues. So to summarize and conclude, section 12 deals with time of supply in case of goods. Section 13 deals with services. Section 14 deals with rate changes. Then we have to comply that timely invoices are issued and we have to track the advances and reverse charge liabilities. Also, taxpayer must monitor the law updates on rate changes. So, the time of supply is a foundational concept under GST that dictates when tax liability arises, ensuring accuracy in tax collection and compliances. It plays a critical role in standard and special scenarios including goods, services, reverse charge, tax rates, advances and vouchers. Understanding these provisions enables businesses to align their operations with GST laws, avoid penalties and optimize cash flow management. So by adhering to the rules governing the time of supply, businesses can ensure timely tax payments, accurate GST filings and proper claim of input tax credits. This is not only to simplify the compliances but also minimizes the disputes and audits. So to conclude, we have a checklist. Issue invoices on time, do not defer the invoices, account for advances as it attracts GST, also track RCM deadlines. So that's it for this session. We'll have few examples and afterwards we will close this session. So let us take few examples. First example, supply of goods with invoice before delivery. So the scenario is a trader sells machine on 5th of July. He raises the invoice on the 3rd of July and delivers the goods on 5th of July. Payment is received on 10th July. So in this case, as per section 12, the time of supply will be the earlier of invoice or delivery. So here the invoice date is 3rd July and the delivery date is 5th of July. So the time of supply will be 3rd of July. Next we have supply of goods with late invoicing. So a manufacturer supplies goods on 10th of August. The invoice is issued on 18th of September, that is beyond 30 days from the date of supply, and payment is received on 20th of September. So in this case the time of supply will be, since invoice is not issued within the prescribed time, that is on or before 10th of September, that is within the 30 days from the date of supply, the time of supply will be date of delivery, that is 10th of August. Then we have advance received for supply of services. A software company receives rupees 50,000 as advance on 1st September for a web development services to be provided on 10th of September. Invoice is issued on 12th of September. So the invoice is issued after the provision of service. Time of supply as per section 13 will be, for services the time of supply is earliest of date of receipt of advance, that is 1st September, date of invoice, that is 12th of September, whichever is earlier. So here in this case the time of supply will be 1st of September as GST is applicable on advances in case of services. Next we have reverse charge mechanism on legal services. So the scenario is the company receives legal services from an advocate on 7th of October. The payment is made on 30th of October. The time of supply as per section 13 will be earlier of date of payment, that is 30th October or 61st day from the date of invoice, assuming invoice on 7th of October. So the time of supply will be 30th of October. Next we have vouchers issued for specific product. A retail chain issues a voucher on 1st December redeemable only against branded shoes. Customer redeems it on 20th December. Here, the time of supply as per section 12 subsection 4 and section 13 subsection 4. If the voucher is for a specific supply, that is branded shoes, here the supplies are identifiable as it is for a specific product. So the time of supply will be the date of issue of voucher, that is 1st of December. So this brings to the end of today's session. So thank you everyone.